Ever-changing market dynamics, including the likes of regulation and digitisation, are driving product innovation in the trade finance space. But what does this mean for banks and their software service providers? Here to discuss this with us today is Brenton Booth, who's the Global Head of Product for Trade and Working Capital at Barclays Bank, and David Henner, who's the Head of Trade Finance at Misys. Now, Brenton, perhaps you could start us off by telling us what are the key drivers of change in the trade space today?
Well, one of the key drivers is certainly technology and the role that technology is playing in helping facilitate the exchange of supply chain data and financial data between clients and banks. Now, banks historically have had to rely on fairly irregular data and old data on which to base decisions in the trade and working capital space, and hence have had a high degree of dependency on collateral when making lending decisions. The access to this real-time data and using it with predictive risk analytics allows us to really get a strong grasp around the risk of the actual customer and to better understand the client's supply chain and the appropriate level of funding. So we like to refer to as data as the new collateral. Obviously, with increased volumes of data and the increased importance of data in the lending decision process, there's a lot of additional regulation around data storage, data access, and data transfer that banks need to comply with, as well as big data. Big data probably puts banks in the strongest position yet to better understand what clients' working capital needs are and effectively to understand risk better than they have ever before as well. But with big data comes big responsibility, and again, we see an increased focus by the regulator ensuring good conduct by the banks, that this information is used in the best interest of the clients all the time.
Yeah, I think that Brenton is absolutely right to highlight regulation as one of the key drivers of change in the market today. Certainly there are other drivers of change. We talk about the new models, the next generation of solutions in both risk and financing. We talk about digitisation, we talk about globalisation, but actually all of those conversations inevitably at some point in time come back to regulation as a kind of root cause or a root driver behind all of those things. So whether we talk about regulation in trade finance in the context of capital adequacy, or we talk about it in terms of KYC AML compliance, it is often thought of as having a negative influence on the business, as being a cost and a constraint. But at the same time, I think it is serving to accelerate the demand for and the development of those next generation solutions. So banks looking into the area of supply chain finance or financial supply chain management or working capital solutions, whatever you want to call it. Banks also having to deal with not only the ability to take on and manage risk, but also increasingly the ability to distribute risk. And then in the whole area of digitisation, as Brenton is saying, the availability of data. Digitisation, true digitisation is not just about mere automation. It's about having the ability to take on data in various ways, of manipulating that data, of analysing that data in order to deliver business added value services in terms of business intelligence.
Now, what do these changes mean to a company like Misys?
In my role at Misys, I have responsibility for managing two business applications. Essentially, we have a back office application called Trade Innovation, which is deployed internally within the bank, but also I have to manage a front office corporate channel, which is used to support the communication between the corporate and the bank. So that's a digital channel, and obviously I have to manage all of the functionality front to back for both trade and supply chain content to make sure that that all flows end to end. So a lot of that investment has been around the global processing model, complemented by software development kit that enables banks to, we call it, orchestrate their workflow, so that you may have different models in different geographies. And then a lot of investment also in the financing solutions, approved payables finance, invoice discounting, also supporting digitisation, specifically around The SWIFT initiatives, for example, the MT798 for traditional trade, the bank payment obligation, which is beginning to obtain some traction now for bank-assisted open account. And then we also have to look at the impact of globalisation, as I mentioned. We deliver a global processing model that enables a bank to deploy a single instance of software to support all of its operations globally. But at the same time, you have to have an application that can service local business requirements. And wherever you look around the world within different strategic markets, there are going to be local requirements, often driven by regulation. So we have to look at those, what I call strategic markets, and make sure that we can accommodate those requirements adequately.
Brenton, faced with all of these changes, how can Barclays leverage this to deliver value to its corporate clients, but at the same time also drive its own internal benefits?
So customers understand very clearly the role that technology has to play in terms of their relationships with their buyers and suppliers. And so they are linking their ERP systems and accounting systems with various participants in the supply chain to create efficiencies in the way they do business and also to reduce their costs. The expectation is similar to the banks. The expectation is that we provide a seamless interface with our trade and working capital offerings to their ERP systems. So we are working with a number of third-party access solution providers. But most importantly, we are investing heavily in new trade operating technology. We've recently entered into an agreement with Misys, who are our strategic partner, and we are currently in the process of rolling out the trade innovation platform. This technology, along with changes to Barclays' trade and working capital operating model, will see significant benefits for the customer. So greater efficiency in terms of how the information is provided to us. And with that additional information, we're in a much stronger position to make good risk decisions around clients and provide quicker access to more funding for our customers. On the bank side, it allows us again to focus our attention away from the day-to-day operational efficiencies, because technology provides that, and we can then use that investment and capacity to focus on client relationships and new product development.
Looking ahead, what are your thoughts on how this is going to progress going forward? What are the next big things in terms of digitisation? Brenton, let's start with you.
So digitisation is changing our personal lives and is changing the way we run our businesses. So customers have the exact same expectation of a bank when running their business. So in the short term, the focus is on making sure that we allow clients to access their lending and their facilities through digital, so accessing information, delivering information, engaging with us, and making payments. In the medium term, obviously the focus is how do we use this digital capability in different areas of our business. Now in the documentary trade area, while we're making great strides in terms of automating the end-to-end process, we still have a lot of physical documents in the process, if you think of bills of lading. And I know a lot of skeptics believe that those physical documents are with us to stay for some time longer. But I think with the technology that we now have available, and also the will of a number of participants in the broader supply chain, we're going to see, in my mind, a strong digitization of those documents in the next couple of years. The second point, of course, is around that access to real-time data from our customers. Instead of just looking at customers and looking to finance individual transactions, it's about how do we take that information along with predictive risk models and turn that information into real intelligence around the risk of our clients and how we use that information to better fund our clients going forward in the future.
Yeah, I'm not a great fan of statistics generally, but I came across one the other day that suggested that the complexity of data is increasing by 1,000% per decade. And that to my mind makes investment in automation, investment in digitisation inevitable. It's a must. So that's something that's inevitably going to increase over the coming years. I do think there will be an increasing focus on the ability to analyse data to support business intelligence, as I mentioned earlier. On financial supply chain specifics, a lot of the hype around supply chain finance has been associated with so-called approved payables finance in a three-corner model. I do think that that model is not sustainable in the medium term. Eventually it will evolve into a four-corner model, which I think actually feeds also into the evolution of the bank payment obligation, which is tailor-made to my mind to support a four-corner model. And I was also interested by the most recent case study that combined an electronic bill of lading with a bank payment obligation, which I think is a proposition that will obtain traction in the corporate market. So I can see that also taking off in the coming months.